All right, everyone, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon and come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it. This week here, so spiders, a little bit of a pullback this week. So last Friday, obviously we had options X. And then really we rallied right up into that. And this week, pretty much right down, right? So with the exception of Thursday, we had a nice pop. And then on Friday, we kind of gapped down here. What's the narrative right now? Well, there's other banks around the world raising rates still, and inflation is still not very, especially in Europe, still not going away. And this is something we've talked about here. In the U.S., we've seen those numbers kind of come in here. Core inflation has remained stubborn though, and obviously we do expect that to continue moving forward. But right now in the short term, when we broke this kind of upsloping trend line here, we had a really hot trend line. If we look on an hourly, or rather a 4-hour time frame, you can see it really steep. So we had that big power thrust for a couple of weeks, and now we're kind of coming back in here. Is this a start of a bigger top, or is it just a pullback here? It kind of remains to be seen right now. We don't really have a ton of volume. We did have a little bit of volume upticking on Friday. I think a lot of that is rebalancing, right? So be aware, this week we are going into end of quarter. We're also going to be going into a holiday week next weekend. Well, I should say Monday. It's only going to be a half day, so markets will be open 9 to 1, 9:30 to 1, and then Tuesday they'll be closed. I will be almost shocked. I will be shocked if we have any sort of major volatility into that. Barring geopolitical news or some type of unforeseen event, I can tell you from experience, the institutional traders, the big boys, they will be taking off probably by Wednesday this week. And they're not going to be at the office. They're going to have, what we call like the JV squad taking over for the weekend. That's the most likely scenario going into a holiday. That doesn't mean we can't pull back further. It just means that generally you want to be neutral and expect light volume. If by some chance we have a sell-off on heavy volume, then that can be a lot more meaningful. Again, geopolitical risk, something of that nature. There's certainly a lot of that going on right now. With the Russia, the 2-hour coup attempt, but then there's other geopolitical stuff going on as well. But right now, just expect that. But for the short term, you can see we went up into that 438 area. I still have that trend line on my chart. And it's really, you can see it a little bit better there on the daily. And it kind of coincides with this. Sorry about that. Coincides with this bear flag breakdown from last year. So those lows. And again, we did pierce it a little bit, obviously last week, and then we came back in this week. So we're going to say that for right now that level's holding up. Now targets here on the downside, if we were to continue pulling back, you should have some support around 428 here on the SPY, 430. If you get through that and you start to go through to these bigger levels, you're going to look to 420, right? So there's your pivot high around 418, pivot high, and then a little bit of a pullback area, 420 in that zone. If we get through that, then we could get all the way back down to this big, and this is a nice clean trend line. I do think at some point the market does test this trend line. It'd be highly unusual if we didn't, considering how clean that is. And we'll look at it on weekly, you can see it right there. If we were to pull back in, the next couple of weeks, it could take you right into that 415, maybe even, 410 area on some overshoot. So we'll watch for that here. But again, right now, this next week, don't be too surprised if we do have, a little bit of a kind of a dull, kind of summer doldrums type action. So just keep that in mind here. Anyways, let's get over to the triple Qs. So let's look here. And again, same kind of area, right? So we've been focusing on these pivots, 1, 2, and you can even kind of go back to 2021 on the triple Qs. Additionally, again, I'll show you one more time. We did go into the 75% retrace, and we rejected that, and now we're coming back in. So again, same kind of setup here on the Qs. Qs still very, very, very overbought, very stretched, very thin. Again, it's a market of 7 stocks. We've mentioned this, repeatedly this week. We did have a nice pop on Thursday, and then Friday came right back in just with the spiders. You'll have some short-term support around 355, and then really just kind of an increment of 5 level there, 350, and then maybe down to 340, and we'll kind of look at those levels if and when we get there. But that's what we're looking at right now. Again, big tech still being the leader. Let's look at the Russell, small caps. This is a ugly chart here. You know, we had a nice pattern here for a pop. Again, I told you guys to 190 to 192. That was setting up a bullish pattern, and that kind of fell through. It's not broken yet. If you close below that green bar, you know, then you're going to probably head back down to 174, 175. You're going to go fill that gap, and you're going to test that reversal bar where we gapped up. So much weaker here if we look at a weekly chart. Outside move down, right? So here's your candle from last week, a little bit of supply in there, and an outside move down. So not a good chart there. And again, weekly down move inside bar. So even though we had that 3-week pop, we're still inside of that red on the monthly. You know, big monthly chart, bear flag. I'm sorry, I'm losing my charts here, but here you go. So down move, big monthly bear flag with a 20-month moving average rejection so far. Okay, until the end of the month, you know, we still have one more week left. It can still pop up, but right now, definitely a lot of weakness there in the Russell 2000. Also, historically, just to throw this out there, last week of June is historically a very weak week for the markets, and then usually you can kind of get a float up into the holiday or after the 4th of July holiday. Something to keep an eye on there. But either way, Russell, again, breadth not very good. If we go back to the triple Qs just one more time, we look at the advanced decline of the composite. I mean, you know, you're basically back to the lows of the year when we were advancing. So again, weak breadth for the rally, and you know, again, market continues to be led by 5 to 7 stocks. Dow here, DIA pulling back as well. That held the moving averages though, so that's in a little bit better shape, but pretty good sell there. 1, 2, 3, 4 down. If we lose these moving averages, you're gonna have to go test this gap window at 333. If you get through that, it's the gap fill at 330, as well as that 331.45 level that we've been watching. Semiconductors here also pulling back. So a pretty good dump there, losing that 20 moving average. Nothing major technical damage here. Back below 144 would potentially change that, and we might need to go retest this trend line. AMD had a pretty good sell this week. Leading semiconductor broke through that pivot low from that power gap. Remember, that's the NVIDIA kind of sympathy gap that we had. We broke through that and then retested this gap on the downside. So definitely on the weaker side there. NVIDIA itself was holding up okay though, although it did pull back as well. IGV, cloud software, again, we talked about this level last week. Never quite got there, you know, got within pennies essentially. But nonetheless, it did essentially tag it. And then we continued to pull back there this week as well, still holding the moving average. If you get through that, your next big level is going to be this pivot high right around 317 to 320. So that is cloud software there. Onto the transports, DJT down 0.75% on Friday, but still inside of this green bar from last Thursday. So that still has potential upside to 15,200. And that's not a terrible consolidation pattern right now. If we start to break back down, then it's going to go retest 14.4. But for right now, I don't really see any major issues here with the Dow transports. All right, let's get over here to interest rates. I want to talk about the 2-year first, as always. So the 2-year yield here holding up again this week. Remember, we had that nice rally, a little curl here, and now we're kind of just flagging. This looks like it wants to test 5%. And right now, we've had, like I said, central banks over the world raising rates. And the thought with the market right now is that the Fed is going to be cutting rates possibly by the end of the year. The 2-year yield's kind of saying otherwise, right? So if this gets back above 5%, remember the Fed paused at the last meeting. If this gets back above 5%, the Fed's going to have a real problem on their hands. So right now, it's looking like it wants to go test that area. We'll see what happens if and when it gets there, but that is a bullish pattern currently on the 2-year yield, and that suggests that rates are going to continue to stay high. So again, that is a problem for the Federal Reserve, especially if it gets back above that Fed funds rate. In fact, you can take a look here. This is when the 2 years started to break down. Remember the banking crisis? So that was in the middle of March. And you look at the SPX, when did it start to reverse? In the middle of March. It's not a coincidence. So market right now is able to rally because the 2-year yield is below the Fed funds rate. If it starts to clip back above it, there's going to be problems for the rally. But anyways, 10-year here, same thing, holding up okay, 3.8. If above that, then it can go to 4%. 30-year, if you can get above 4, then you can go to 4.2. So it's pretty simple there. 4 rates, and that is the dynamic that we are watching moving forward. On to home builders here, XHB still holding up. That can still get to, we're going to call it 78 for now. No problems there on the XHB. ITB, if you follow that, that could still go to 83, no problems. VNQ had a pretty solid breakdown here. So general real estate equities went up into this trend line. Again, that's been resistance for about 3-4 months now. And 1, 2, 3, 4, 5 days down, basically filling that gap from the first. So this continues to be a weak chart here, really on all time frames. There's the weekly here and the monthly as well. So not a very good chart either way you look at it. All right, on to financials here. So I'm going to talk about this. So XLF here, down 43 basis points on Friday, pulling back with the rest of the market. We talked about this last week, remember? I said we just barely closed below that 50-week moving average, so we got rejected. And this week we gapped down, and now we're back below the 20. But the real story here for me is the regionals again. So this may be starting to bubble up again. Now we take a look here. I've been talking about this pattern. I said, look, we have an up move, and we're just pulling back sideways, right? So this can get to, what have I been saying, 46, somewhere in that area. Well, the bottom fell out of that this week, and we closed below that green bar, that big green bar from the 6th. That's a big negative. The regionals here, we talked about this last week, they can't do equity share dilution at these valuations. They can't. Their deposits are still falling. And additionally, I'm going to tell you guys this now. I know everybody has their opinion about Janet Yellen, and so do I, but when she says things, you should listen to her. Back in 2021, she said way back in April, I think it was one of the first videos I did here on this channel, and I said, look, Janet Yellen's telling you that interest rates are going to go higher. Why? Because she came out and said, hey, interest rates rising would actually be a good thing for the economy. And I said right there and then, guys, this is her way of telling you, prepare for higher rates. This is back in 2021 in April. Now she is saying there'll probably be banks that will end up wanting to merge. I think it's going to be manageable. She also said that it would be a good thing for the sector. That's not quoted right here, but she's telling you it's going to happen. So, and I think I'm seeing it in the charts. Remember, if you remember back to December, I told you guys the regionals were going to be a problem. When I saw this breakdown, this was before the equity market started to sell. We talked about there was probably going to be problems in the regional banks. This is way back in December before anybody had any clue what was going on. Right now, we're seeing the problem start to bubble up again, and that's despite the BTFP program or the discount window. So again, we said it before, these guys aren't out of the woods yet, and yeah, we're definitely seeing it in the chart. So just be aware of that moving forward. All right, KBE, same thing. A large bank ETF lost that green bar, definitely on the weaker side. Broker dealers have been outperforming, and that pulled back though. And it was able to hold its 200, or should say 20-day moving average there on the daily, but nice pullback. If it breaks that 200, then it's back down to 450. Could this still get to 490? It still can. So it just needs to firm up a little bit more, but that did pull back with everything else. Anyways, let's get over to commodities here. We'll start off with crude as always. So that is up. We're actually doing this video Sunday night, so futures are open right now. It's actually up 1%. And we're really watching this level right now. So right around 66.75. That's kind of the line in the sand right here. If it breaks that, then you got some support at 60, and then, believe it or not, down to 50. So we'll watch that. I'm a big bull on crude long term. Right now, I still think it's going to be under a little bit of pressure. They're still releasing the SPR. There's still some things going on here. Probably in the second half of the year, though, we're going to get a pretty good buying opportunity in crude and really all energy related and commodities in general, I believe. But we can get into that some other time here. But either way, crude still in this range here, and I'm not doing anything with it at the moment. XLE, kind of the same thing here, pulling back this week. Again, we just can't seem to get it back above this trend line here. On the weekly, you have some support at that 100-week moving average. I think it really wants to go test that 70 to 71 area altogether, though. And then XOP, same thing. I think that wants to go down to the 110 handle. OIH holding up a little bit better. That still needs to get above 280 on a weekly close. All right, nat gas had a nice pop on Friday, and it's continuing to pop here, up 2% on the futures. So we've been watching this for a while here, and it took off. So nice little pop on Friday. you can also see, I've got an article here for you, if I can get it pulled up. There we go. Money managers bailing on the Natgas short trade per CFTC. Short positions fell by 38,449 contracts. That's a lot. The most since February 2nd, 2021. Despite gas prices being down, et cetera, et cetera. So shorts are giving up, right? So, and again, we talked about this last several weeks, higher lows, higher highs. That's evident that shorts are starting to lose control. And on Friday, we saw a nice pop there. And Natgas set to break out. There's kind of a little channel that it's been in that we pushed through on Friday. Next stop is 3, and then 350. After that is $4. So Natgas turning around nicely. And we built a nice base here. So that is set up for a bottom. And you can see before, historically, if we go on a monthly here, this is kind of how Natgas bottoms, right? So even going back to 01, you have a big sell, and then just kind of sideways chop for a few months, and then it reverses big. Big move down, sideways for a few months, and then you get a big reversal. Same thing in 2020, big down move, sideways, and then a huge pop. So, and by the way, there's your last time that that article was referring to. That was February 2021, where we had that much covering, and you can see what happened after that. So either way, big move there for Natty, and so that is holding up well. Let's get over here to uranium. CCJ, not too much to talk about. It did pull back pretty sharply, but this is nothing wrong here. Just doing weekly consolidation, as long as it holds up in this range. This is still setting up for a move higher. I don't have any issues with it. Same thing with URNM. I don't care that it closed back below this yellow line. That's not important. What's important is you got above it and closed above it in the first place. So just weekly consolidation here, and this will be set up for a move higher, so no problems in the uranium market. As far as DBC, really just an inside week. Tried to get back above that trend line and pulled back, but no problems there. If it can consolidate more, it can go through that, so no issues. MOS, just trying to flag here. I still think that wants to put in a ABC type up move. Same thing with Intrepid and NTR. NTR actually has a little bit better of a pattern than the other two, but that should get a nice little zigzag to the upside. Let's get over here to the dollar index. Let's look at DXY. DXY, still just kind of struggling with that 103 area. We had that big breakdown last week. If we look on the weekly, we had a nice pop on Friday, but still inside of a lot of red. You need to reclaim that 20-week moving average, and really back above 103.75 on a weekly close gets me bullish again. But right now, I don't like what it did last week, as I referred to you guys. But we'll see. This pattern, if it can firm up, then it can push higher. Like I said, it did get a bounce on Friday, but it still has a lot more work to do. Over to gold. So gold did slip a little bit last week. I think that wants to go test 1900. After that, it's really 1850. But we did close the week below that 20-week moving average finally, and I think it needs to go test that 1900 handle again. It coincides with that big trend line going all the way back to 2020. Silver also pulling back as well. This is good. I'd like to see this get a little bit lower here. I've already got some buy levels worked out. We talked about 22 for a while. I think 21 is a good area as in addition, but not doing anything with it at the moment. It's kind of just fighting with that 200 moving average right now. And we'll see what kind of pattern it puts in off of that, but I do like that 21 area for a potential entry. Platinum here backing off pretty nicely. So into that 960 handle, we said that needed to get tested. It did. We broke it. It is into some short-term support. You see that green bar came all the way down. That's where we reversed. So that's where the money's usually going to be sitting. So we should get some type of a reaction off of that. And then we'll kind of go from there, still watching and waiting for pattern on these kind of on platinum and palladium, same thing. So that is continuing lower. Was interested in getting in this. I did hold off, which looks like it's been a good idea so far. But again, if I see some type of pattern or something change, I will of course let you guys know, but that is still under some pressure here. Copper, that had a pretty good pullback Thursday, Friday. It's not broken. That could still potentially get to $4, but if you start losing these moving averages, it's going to need to go test 370, and I think it really wants to go down to 340. But right now, just a pull back there, and if it consolidates and firms up, it can still go back to 4, so we'll leave it at that. Okay, lastly, let's get over to Bitcoin here. So Bitcoin had a big move this week, big power thrust. Again, we talked about, last week, really the last several weeks. I said, look, you're building in a bear base. It really needs to start to firm up here. But I'm not really willing to call it dead in the water, because on the weekly it still looks okay. And, Bitcoin has a tendency to just take a bid out of nowhere. And that's kind of what happened, right? We had some good news, positive news, regulatory news, SEC kind of throwing a bone to crypto in a wave of bad news, right? So we had Coinbase, Binance getting sued, and the regulators kind of came out and talked that down, or at least talked Bitcoin up this week. And you saw, a big surge, 25 to 31. I was really hoping for it to get to 23.5. So I thought that a price target for that area was a potential long setup, but obviously it didn't get there. This can still go to 32,500 in the near term. So that's what we're looking for. If it consolidates, it probably wants to push through that, which it's starting to do now. There's your 1-2 inside days. It'll probably push through that double top, and then 32.5, we'll evaluate it if and when it gets there. All right, so lastly, again, just back over to the spiders here to recap. Again, next week, historically, last week of June can be very turbulent for markets. When I say turbulent, I mean it's performance-wise, it's generally pretty negative. That doesn't mean that we're going to see massive selling. Again, the closer we get to that holiday, the drier the volume is going to be. And a lot of the time that favors neutral to upside, again, outside of any geopolitical issues. So first step, if we do start to pull back, you'll have some support at the 20 MA and 428 on the SPY. If you get through that, again, then we can talk about 420. And then, which I don't think we're going to get to this week, but again, that big trend line, I'm sure that will come into play in the future, though. Anyways, guys, going to wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. I'll talk to you all next week.